All right, today we're zeroing in on one single, absolutely pivotal day for the global economy, February 17th, 2026. This is a day where you've got these huge economic tremors shaking the world's biggest players, and they're colliding head-on with some incredibly high-stakes diplomacy. The result? The entire global market is just teetering on a knife's edge.
So let's just dive right in. You've got two economic superpowers, and both are showing some pretty serious signs of strain. At the same time, there are two major wars at the heart of some super delicate peace talks. And of course, you've got the markets just trying to figure out what it all means. So how do all these pieces fit together? Let's unpack exactly what happened. First things first, we've got to look at the foundation, right? And on this particular day, the foundations of the world's two largest economies, China and the US, they were showing some pretty serious cracks. We're going to start in Beijing. Okay, just look at this number. Negative 3.1%. So what does that even mean? Well, this is the year-over-year drop in China's new home prices for January. It's actually the steepest fall they've seen in 7 months. And believe me, that is a massive warning sign coming from a sector that used to be the engine of China's growth. And this quote from analyst Zhang Dawei really puts that number into perspective. I mean, he just cuts right to the heart of it. He's saying that despite everything the government's trying to do, the property crisis it's just far from over. That weak demand he's talking about, that's the core issue, and it sends a chill through the entire Chinese economy, from what people are buying to how much debt developers are in. Now, let's pivot. We're going to hop across the Pacific and land in the United States. And to really get the American side of this story, we have to talk about inflation. And the key number for that is the CPI, the Consumer Price Index. And this data, well, it really shows the tough spot the Fed is in. That top-line number, 2.4%, that's actually pretty good. It's one of the slowest increases they've seen since 2021. So on the surface, inflation looks like it's cooling down. But then you look closer. Shelter costs, we're talking rent, things like that, are still stubbornly high at 3%. That's a huge part of everyone's budget, and it's a major headache for policymakers. So you end up with this kind of split-screen reality. On one side, you've got inflation numbers that are calming down, but on the other, you've got a Federal Reserve that is just slamming on the brakes. The words from Fed Governor Barr here are so important. They are in absolutely no rush to start cutting interest rates. They want to see a lot more proof that inflation is really and truly under control before they make a move. Please remember to subscribe to our channel and turn on the notification bell. Share and like our videos. This is not investment advice. The information in this video is compiled from open sources. Thank you. Okay, so with that whole economic picture set, let's move on to the second major story of the day. Because what's happening isn't just on the trading floors, not by a long shot. It's also happening behind closed doors in Geneva, Switzerland, where some seriously high-stakes diplomacy is going down on two completely separate fronts. I mean, think about this for a second. On the exact same day, in the exact same city, you have two critical negotiations happening. First, you've got the second round of indirect talks between the US and Iran over their nuclear program. And then you have the third round of US-brokered peace talks between Russia and Ukraine. The fate of two major global conflicts is literally hanging in the balance, right here, right now. So let's look at those Iran talks first. There's, a little glimmer of hope. Both sides are saying they've made progress on a set of guiding principles. But, and this is a huge but, this thing is incredibly fragile. Iran's foreign minister comes out and immediately says a final deal is still a long way off. And then you have President Trump just kind of looming over the talks, reminding everyone that the military threat is still very much on the table if diplomacy fails. Now, you compare that to the Russia-Ukraine talks, and the tone is just completely different. Sure, they're talking about practical issues, but sources are making it very clear. Kyiv and Moscow are miles apart on the big stuff, territory and security. And the Kremlin's not mincing words, reaffirming their unwillingness to compromise. For the markets, this awful stalemate has weirdly become a known thing, a chronic risk that's just kind of already priced in. So, we've got a shaky global economy and two very, very different diplomatic stories playing out. How in the world are the financial markets supposed to process all this? Well, for the answer, we can look to the classic barometer of global fear and uncertainty. Gold. So gold went on this incredible run, right? It gained 60% in 2025 as all this geopolitical tension was ramping up. But now look at where it is on our day, February 17th. It's pulled back in a big way, trading around $4,930 an ounce. So what gives? What's causing this sudden change of heart? And here we go. Here's our answer, straight from market analyst Jim Wyckoff. He just connects the dots perfectly. The market is looking at the news coming out of the US-Iran talks and seeing it as a sign of de-escalation. Now, why does that move the needle more than the Ukraine situation? It's because a direct conflict with Iran threatens global oil supply lines, a massive, unpredictable shock to the whole system. So even a tiny step away from that cliff edge lets the markets breathe this huge sigh of relief. So let's bring it all together. The price of gold on this one day is basically being pulled in three different directions that we've just talked about. You've got the Fed's cautious, hold steady stance on rates, which makes the US dollar stronger, and that makes gold more expensive for everyone else. And then, most importantly, you have that feeling that the immediate, unpredictable risk from the Iran talks is easing up just a little. So, as February 17th comes to a close, what we really see is a world just being pulled in opposite directions. The future is anything but written. It is completely up in the air. And so we're left with these two fundamental conflicts, right? In the economy, you have these clear signs of a slowdown, clashing with central banks that are really hesitant to take their foot off the brake. And then in geopolitics, you have this tiny, faint hope of diplomatic progress, but it's set against the very real and ever-present risk of military conflict. And that leaves us with the ultimate question. The global markets are caught in this giant tug of war. You've got central bank policy on one side and raw geopolitics on the other. It's an incredibly delicate, totally unstable balance. You have to wonder, which one is going to break first?